calculation of bond duration. A rupees 100 per value bond having coupon rate of 10% per annum and 5 years to maturity is currently selling at rupees 86. So the current selling price is 86. So the current price is 86. Its yield to maturity is 14%. So YTM on this bond is 14%, and I'm sure by now you would have understood. So when you say YTM, or when you say market interest rate, or when you say market rate, it basically mean the same thing. It basically mean the same thing. And here it is. It clearly says its yield to maturity is 14%. Calculate the bond duration of this bond, that is the time taken by the bond in its repayment in terms of present value. And of course, you have been given the options: 1 year, 1.10 year, 3.10 year, 4.10 years, and of course none of the above. Now, how do we calculate the duration in respect? How do we calculate the bond duration in this case? So computation of duration of bond. Now this is how we will do. So firstly, what we will do, we will have the first column, and that is column of the time, and that is column for the years: year 1, year 2, year 3, year 4, and so that is the first thing. And I'm sure you can notice it. The calculations that we are doing is nothing but the calculations that we do for calculation of present value. So this is your column number 1, and that is year, and you know the case already. And what is the case? The case is the coupon is 10%. Coupon is 10%, and face value is 100 rupees, and tenure is 5 years. YTM is 14%, and it is selling at 86. इसका मतलब क्या है? इसका मतलब ये है कि 86 रुपीज़ का बॉन्ड अगर आप खरीदने जाते हैं तो योर आउटफ्लो is, because its current selling price is 86 rupees, so your outflow is going to be 86 rupees. So your outflow is going to be 86 rupees. Now on this 86 rupees you are going to get coupon over next 5 years, and that is 10 rupees each for next 5 years, and plus at the end of the 5th year you will also get the face value, which is 100 rupees. That means at the end of the 5th year your cash flow from this bond is going to be 110 rupees, and in the first 4 years is going to be 10 rupees every year. So how do we calculate the bond duration? So firstly, put the column and make the first column and write down the years, that is time. Then second column, write down the cash flow. So what is the cash flow that you are getting from this bond, and that is what you should write in the second column. And as you can see, as we discussed, 10 rupees, 10 rupees, 10 rupees, 10 rupees for the first 4 years, and for the last year is going to be 110 rupees, because in the last year not only you're getting the coupon, but you're also getting the face value as redemption of the face value at the end of the 5th year. Now it is given to us in the case, and that is, what is the YTM, yield to maturity? Yield to maturity is 14%. So I'm sure as we discuss this, you can very easily understand. You call it discount factor, you call it yield to maturity, you call it market interest rate, you call it market rate. Ultimately, they all mean the same thing. And what do they mean? They mean as to how to find your discount factor. So how do we find the discount factor? In this case, 1 upon 1.14. So when we divide 1 by 1.14, we will get 0.877. And then what we need to do? We need to divide 0.877 by again 1.14, and keep doing it like this, and till the time we come to the discount factor or the present value factor up to the 5th year. Now what we do? Now we multiply the cash flow with the discount factor, as we do in case of finding the present value. In case we find the present value, how do we do? We multiply the cash flow of the year with the discount factor of the year. So when you do that, you can realize, and when you calculate it by yourself, you will find out that the present value of the cash flows for the year 1 is 8.77, and that is because the discount factor is 0.877 and the cash flow is 10. So you multiply 0.877 with 10, and you get a present value of the cash flow 8.77 for the first year. 7.69 for the second year, 6.75 for the third year, and 5.92 for the fourth year, and 57.09 for the fifth year. So this is the present value that you have arrived at, and the total of the present value comes to 86.22. That means what? That means this 86.22 is the present value, of all the cash flows that you are going to get on this particular bond, that is 86.22. Now in the fifth column, what do? In the fifth column, you multiply the PV weighted time, and you find out the PV weighted time, that means present value weighted time. And how do you find out? You take the present value into time. So this is your time and this is your present value. So what you do, you multiply 1 with 8.7, you multiply 2 with 7.69, you multiply 3 with 6.75, you multiply 4 with 5.92, you multiply 5 with 57.09, and all these numbers you write in the last column, and that is how it will be. So this is your present value of the cash flow on the bond, and these are the present value weighted time, यानी कि present value into time, and that is your present value weighted time. उसका आपने टोटल लिया तो वो टोटल कितना आता है? वो टोटल आता है 353.53, और ये 353.53 है, you divide it by the total of the present value, that is 86.22, and when you solve this you get the answer of 4.10. Now what is the meaning of this 4.10? 4.10 का मतलब ये है कि अगर आप इस बॉन्ड में इन्वेस्ट करते हैं तो आपको आपका जो पैसा है इन रियल टर्म्स, in terms of present value, you in a period of 4.10 years you will get your money back in terms of, in real terms or in terms of present value. So this is how, friends, you calculate your computation of bond duration. Now obviously जब हम बॉन्ड ड्यूरेशन की बात करते हैं तो ये बहुत कॉम्प्लिकेटेड लगता है, लेकिन जब हम कैलकुलेट करने के लिए जाते हैं तो हमको मालूम पड़ता है कि बिल्कुल भी कॉम्प्लिकेटेड नहीं है. क्यों? क्योंकि हम प्रेजेंट वैल्यू कैलकुलेट करते ही हैं इन एनी केस. तो हमने प्रेजेंट वैल्यू तक कैलकुलेट किया. एडिशनल कॉलम कौन सा है इसमें? इसमें एडिशनल कॉलम है ऑफ, एडिशनल कॉलम इज ऑफ present value weighted time. And how do you find out the present value weighted time? You find out the present value weighted time by multiplying the year and the present value, and this is how you will get this number, and this number then will give you your duration of this bond, and that is 4.10.